Treasury debt buyback operation preliminary announcement. So obviously the title states that, they have bought, but no, this is preliminary announcement, which means they could go and potentially end up doing this. This is massive for crypto and stocks. And we're going to get a little bit more into that. If this does end up happening, this is highlighting a lot of big things. And you can see this for yourself. Operation date, September 3rd. So appreciate all the love that you guys show on a regular day-to-day basis. As far as the broader market is concerned, we did not see overall a bad day. Market's still looking really good. We did start off on a really positive note. We were anticipating that coming out of the long weekend. And as we are going into Wednesday morning, majority of the market is carrying on that momentum, which is great to see, of course. As far as XRP's price is concerned, currently sitting at $2.82, up 1% in USD. And we're up about 0.3% in Bitcoin. Comparative valuation 167.5 billion and a 24-hour trading volume at $7 billion. As always, just a quick disclaimer, anything on this channel is not financial advice. Always do your own due diligence and research when you are investing in crypto. So the reason why this is such a big deal is we've been talking about a rate cut, right? We've been talking about rate cut this, rate cut that, and a lot of anticipation that this month is where that rate cut could really take place. But what this out here means is something even bigger. If Treasury is going out to buy their debt, pretty much buying bonds, they're pretty much trying to, in a way, refinance at a cheaper, level, which puts, obviously, when yields are dropping, right? Obviously, interest rates are dropping. Investors would think, you know what? It's not as lucrative anymore for me. Maybe I should start looking into riskier assets such as stocks or crypto. And that's where the liquidity flows into these markets. So in terms of a timing aspect, things are starting to make sense, specifically the rate cut. The rate cut is where, this all is aligning. All these puzzle pieces are starting to align. A big thing here. We want to obviously keep this in mind, and obviously I'll keep you guys updated as we do get a little bit more information. But one thing is, it's preliminary announcement. But with that said, let's continue to take a look at what's happening. So Ethereum validators entry queue hits 2-year high with over 860,000 Ethereum worth its 3.7 billion waiting to be staked. And shout out to X Finance says that's a serious backlog, shows growing confidence in Ethereum staking. And around 332.8 million of Bitcoin were bought, while 135.3 million of Ethereum were sold on September 3rd, which kind of explains what's happening because, dominance did, wick up to the likes of 58.84%. BTC, on the other hand, did see this push towards the upside. We did come up to the 112,000 almost, but not really breaking out of there. So far, so good. But again, not out of the woods just yet. You guys know we're looking for confirmation. And as of now, we're not at those levels. But we're going to take it one step at a time. But speaking about a rate cut, look at this. Treasury, Secretary Scott Bessent will begin interviewing candidates for the next Fed chair on Friday, per Wall Street Journal. So they're actually looking to replace Jerome Powell, which is, again, quite interesting to see. Do let me know your thoughts on that and who do you think is the best candidate. But remember, alternative rails like Ripple have been successful. But if you do it if you do a bit of digging, you sometimes find that they still work with Swift. Remember those connections. Some big news, though, today. It was some major news. So in a rare show of unity, SEC and CFTC staff just issued a joint statement clarifying that SEC and CFTC's registered exchanges are not prohibited from facilitating the trading of certain spot crypto asset products. Chair Pal Atkins says market participants should have the freedom to choose where they trade spot crypto assets. CFTC Acting Chair Caroline Pham says, under the prior administration, our agency sent mixed signals about regulation and compliance in digital asset markets, but the message was clear. Innovation was not welcome. The chapter is over, meaning, we're starting to go into the new era where, we're starting to kind of make everything clear. And that was literally not the case under the previous administration. And you can really see how far things have come. And this is something a lot of people forget, but again, a continuous reminder for not to overlook this. But the move marks a major step in the agency's Project Crypto and Crypto Sprint initiatives aimed at coordinating oversight while expanding venue, choice, and optionality for U.S. market participants. And to the dear XRP community, this is our take about how it's going. RLUSD on Ethereum doesn't replace XRP, but it makes XRP more liquid, more connected to DeFi, and more attractive for institutions. That increases demand for XRP as a bridge asset in Ripple ODL via Flare networks. Greatness. And of course, we've already discussed that, but look at this. Finally, direct confirmation. So Ripple and Thunes are combining Thunes network with Ripple blockchain-powered payment solution to allow Ripple enterprise customers to more easily withdraw funds in new currencies and countries. This has always been hard to confirm and print, and then quotes indicate blockchain assets. By supporting real-time settlement and deep local integrations, we are enabling digital asset companies to deliver seamless, compliant, and accessible cross-border payments at scale. This is obviously according to Thunes. This partnership not only facilitates seamless, low-cost transactions, but also supports the growing demand for innovative blockchain-powered financial solutions globally. And that is coming from Ripple themselves. But now, let's talk about the price. As far as the dominance is concerned, we're sitting at 58.62%. Have seen a little bit of an uptick, but, we have seen quite a sharp, move towards the upside since August 31st. We were sitting at 57.8%, but we did come up almost a percent. But we have seen a little bit of a retracement as far as the dominance is concerned. BTC currently sitting at $110,700 right now. Still having a hard time breaking out to 112K level, which was a support for us after breaking below 115. And as of now, it is holding good. So far, the 23.6 key support line is showing me that might have been the, bottom before we start the next wave. But as of now, we're not out of the woods yet. We still need to look for confirmations. As far as XRP is concerned, holding really nicely. We did come up to $2.87 a few hours back. Have seen a little bit of a minor pullback. So far, so good. Nice consolidation. We need to zoom out, take a look at the bigger picture. And as I stated to you guys before, I am projecting for us to, get back up to the $2.90 much quicker than a lot of people think. And literally, we came up to $2.87 literally just a few hours back. So that tells you everything you need to know in terms of how good XRP is holding. We're going to take it one step at a time. Let me know in the comments what you guys think. We'll see you later when crypto's DX, and peace out. Earlier today, we discovered a leak that completely alters everything. The leak comes from BlackRock, which is one of the largest financial managers in the world. For a considerable amount of time, BlackRock has been at the forefront of financial innovation, influencing markets through the introduction of new products and the implementation of strategic initiatives. It is well known for its ability to manage assets worth trillions of dollars. On the other hand, the information that you are about to hear in the crypto world is completely different from what you have heard in the past. It's not just about the recent announcement of the iShares XRP exchange-traded fund, ETF, which many people seen as a significant move, but perhaps not as significant as it could have been. A leak of an internal roadmap from BlackRock reveals that the company is currently working on a much more comprehensive plan, one that has the potential to alter the way in which people all over the world utilize XRP and the way in which digital assets are used in general. The proposal, which has been given the codename Project Phoenix, aims to launch a wide variety of financial products that are based on XRP and will together maintain more than $100 billion worth of assets. The significance of this cannot be overstated. We are discussing a long-term strategy that aims to transform XRP from a cryptocurrency token that is mostly used in a specific niche into a core asset class that is particularly popular among institutional investors, pension funds, national wealth funds, and individual investors. This leak demonstrates that the iShares XRP ETF, which was just accepted and made public, is just the beginning of what is to come. This is one of the most essential things that shows. BlackRock is currently working behind the scenes to develop a wide variety of products that, T will draw money from a variety of investors and then put that money into XRP at the same time. An XRP institutional trust is one of these products, and it is designed for large hedge funds and asset managers who are interested in entering the regulated cryptocurrency market. One more option is a private XRP pension fund that caters to retirement funds and institutional investors with a long-term perspective. Finally, there is a sovereign wealth fund that is based on XRP that is intended for use by national reserves and government investment companies. The PowerPoint presentation at BlackRock titled Project Phoenix Full-Scale XRP Adoption that was taken without permission is of great assistance. A detailed timetable is provided, which includes the introduction of the Exchange-Traded Fund, ETF, as the first phase, followed by the rollout of the institutional trust within a few months, and finally the beginning of the pension fund and the sovereign wealth fund not long after that. In order to ensure that the onboarding process is carried out without any hiccups, that rules are adhered to, and that the market impact is maximized, this stage strategy is being utilized. Over the course of time, it is a component of a well-thought-out plan to flood the XRP environment with consistent capital from a variety of sources. What is the significance of this? The funds that BlackRock manages have a total value of more than $10 trillion, making it the largest investment manager ever established in the world. Whenever a significant organization such as this makes the decision to support XRP in this manner, it fundamentally alters the way in which the market operates. The quantity of money that would pour in as a result of Project Phoenix would be significantly greater than any other wave of cryptocurrency adoption. In the first 2 years, the roadmap predicts that at least $100 billion will be invested in products that are based on XRP. If something like this occurs, it will put a significant amount of pressure on the price of XRP to increase. I am not merely speculating about the cost of the item. It is a fact-based approach that BlackRock takes. There has been a rapid increase in the number of institutions who are looking for properly controlled investment vehicles for cryptocurrencies. Regulatory and custodial risks that come with directly owning cryptocurrency have been a concern for hedge funds, pension funds, and sovereign wealth funds, and they have been waiting for trusted and legal solutions that will provide them with exposure to cryptocurrency. The purpose of Project Phoenix is to accomplish exactly that. Considering that XRP is a more effective instrument, it is reasonable for institutions to begin utilizing it. Because of its high transaction throughput, cheap fees, and the fact that it has a proven track record of use in international payments and processing, it is extremely beneficial. While some other cryptocurrencies are still relatively new or targeted to a specific market, XRP has established connections and partnerships with banks and other financial institutions all across the world. BlackRock's strategy makes use of these strengths in order to develop a robust collection of products that are tailored to the requirements of institutions. In addition, the extensive history of product creation expertise that BlackRock possesses lends support to this narrative. Throughout its lengthy history, they have been the pioneers in the provision of exchange-traded funds, ETFs, mutual funds, and other investing vehicles that make new asset classes accessible to a greater number of persons. Given that the name iShares is inextricably related to trust and liquidity, it will be of great assistance in attracting hesitant investors who have been sitting on the sidelines with their money. It is quite vital to consider how extensive and diverse the product line is. To ensure that there is a robust demand for XRP, BlackRock pursues a wide variety of investors from a variety of diverse backgrounds. Participants in this category include private investors through the Exchange-Traded Fund, ETF, pensioners through special retirement funds, and governments through sovereign wealth vehicles. The utilization of this multi-tiered demand strategy helps to maintain price increases while simultaneously reducing the danger of market instability. Write down the time as well, as this is also very significant. People who are close to BlackRock have said that CEO Larry Fink will shortly make an announcement on the launch of the iShares XRP Exchange-Traded Fund, ETF. It appears that the roadmap that was leaked has accelerated the timeline for this release. As a result, BlackRock has revealed the first phase of the project earlier than they had originally anticipated because the market is so interested in it. The fact that BlackRock is confident about the regulatory position and believes that moving swiftly will result in significant benefits is demonstrated by this. In addition to BlackRock and XRP, Project Phoenix has a great deal of other implications as well. It's possible that this will mark a paradigm shift in the way that institutions in general use cryptocurrency. It is anticipated that asset managers and financial giants would engage in the same activity, which is the production of their own digital asset goods, and engage in competition for market share. There is a possibility that digital assets will gain greater widespread acceptance as more institutional capital is invested in them. This may result in the generation of novel ideas, an increase in liquidity, and improved engagement with conventional forms of finance. Those who already possess XRP, as well as those who are interested in purchasing it, will see an increase in price as a direct result of this roadmap. XRP's market value might be pushed into the trillions as a result of the enormous quantities of money that could flow in, which would make price goals in the thousands of dollars an actual possibility rather than simply a guess. This is due to the fact that in order for XRP to be able to fund $100 billion worth of product assets, some additional liquidity and a greater market cap are required. It would then be on par with the best financial assets in the world if this were to occur. The strategic objectives of Project Phoenix are also in accordance with wider financial trends that are occurring all around the world. In the direction of digital currencies, tokenized assets, and banking that utilizes blockchain technology, things are moving more quickly. BlackRock's XRP suite offers to provide institutional investors with options that are safe, regulated, and scalable. These are the kinds of alternatives that institutional investors seek. A healthy dose of skepticism is to be expected. Nonetheless, there are leaks that need to be checked. There are legal impediments, and market conditions can alter. Because